Welcome. Today, we're going to cut right through all the noise in the Japanese stock market. To get a really clear signal on where things stood on December 3rd, 2025, we're going to use a powerful four-layer analysis. So, let's get into it. So, let's start with the big question of the day, the one that probably had a lot of you scratching your heads. You see the headlines, right? The Nikkei, which tracks all the biggest companies, is flying high, but the Topix, which is a much broader index, is actually down. I mean, how does that even happen? It's this exact kind of contradiction that makes trying to read the market so tough on any given day.
And look, if you follow the markets, you know this feeling all too well. It's just the constant flood of news, chatter, and opinions that are often pointing in completely opposite directions. It is so easy to get lost in all that noise. And it all leads to that one frustrating question you ask yourself probably every single day. Okay, so what does any of this actually mean? Is it time to buy, sell, or just sit on my hands? It can be exhausting trying to find a clear answer. Well, today, we're going to try to swap out some of that confusion for clarity by using a structured approach, the four-layer analysis. Think of it as a powerful lens that helps bring the entire market landscape into sharp focus. It's pretty straightforward, really. The framework is built on four distinct but crucial layers. First, we're going to look at the market itself, the prices, the volatility. Then we'll dive into policy. What are the central banks and governments up to? Third is trade and supply chains. And finally, we'll take the temperature of the geopolitical climate. All right, now that we have the framework, let's put it into action. Here's the breakdown for December 3rd, and we're going to start with that first layer. First up, layer 1, the market. So the Nikkei surged over 1%, and it was driven almost entirely by a huge rally in tech. I'm talking big semiconductor stocks like Advantest and Tokyo Electron just soared. And that explains why the broader topics was actually down a bit. Critically, volatility is calming down. The Nikkei VI index, Japan's fear gauge, actually fell, which is a great sign of cautious confidence creeping back in. So what does that all boil down to? We distill all that information into one number, and today's market score is a very, very strong 64. Now, any score above 50 is positive, so 64 is telling us the market environment is robust and that investors are feeling pretty good about taking on risk. Okay, moving on to our second layer, policy. Right now, everything, and I mean everything, revolves around one massive question. Is the Bank of Japan going to raise interest rates this month? That uncertainty is just dominating everything. We did see the 10-year bond yield ease just a tiny bit today to 4.08%, but believe me, the tension is still high. The best way to describe the current financial conditions is like a tug of war. On one side of the rope, you have the fear of higher interest rates pulling back, acting like a powerful brake. But on the other side, you've got everything else, from strong stocks to high liquidity, just slamming on the accelerator. And you can literally see this tug of war playing out in the data from the Financial Conditions Index. Look at rates. That score of 60 means they're tightening conditions. But then look down the list. Strong equity markets, a weak yen, and tons of liquidity are all pulling hard in the opposite direction, and they're pretty much canceling out that drag from rates. So when you balance all those forces out, what do you get? The overall policy score for today comes in at 44. Now, since that's below the neutral level of 50, it means policy is still a slight drag on the market. But, and this is important, this score has actually improved from yesterday, so the pressure is easing up just a little bit. All right, on to layer 3, trade. And the picture here is actually pretty positive and stable. Global demand for high-tech Japanese components, we're talking stuff for AI and electric vehicles, is still really strong. Manufacturing surveys are showing signs of hitting a bottom and maybe starting to recover. And best of all, most of those supply chain headaches we saw before have finally been resolved. This all translates into a solid trade score of 56. That's a clear tailwind for Japan's big export companies and a really reliable source of strength for the economy right now. And finally, let's hit our fourth layer, geopolitics. Look, the long-term risks, they haven't just vanished. Things like U.S. trade policy and tensions in the Middle East are always lurking in the background. However, and this is key, there were no major flare-ups today. And the fact that market volatility is down tells us investors aren't currently worried about any new immediate threats. This gives us a geopolitics score of 46. So kind of like the policy score, it's a slight drag, sitting just below 50. Think of it as a persistent low-level headwind. But the important thing is that it's stable and it's not getting any worse. Okay, so we've looked at all four layers on their own. Now for the fun part, let's put them all together and see what the complete picture looks like.
And here it is, our final scorecard for the day. You can see it instantly. The strengths are clearly coming from the market itself, with that big 64 and trade at a solid 56. The weaknesses, or the drags, are coming from policy at 44 and geopolitics at 46.
So when we average these four scores out, we get our single headline number for the day. And the composite score for December 3rd is 52.5. This gives us one number, a quantitative measure of the entire market environment.
So what does a score of 52.5 actually tell us? Well, in simple terms, the verdict for today's market is slightly bullish. We are in positive territory, which suggests that right now, the tailwinds are just a little bit stronger than the headwinds. Okay, so that's the snapshot of today. But the real power of this analysis is what it tells us about what's coming next. So let's look at the outlook and the key takeaways. The outlook, really, it all hinges on that policy layer. In the bullish case, the Bank of Japan signals a very gradual, cautious approach that would reassure markets, let the current tech rally keep running, and probably push the Nikkei up towards 51,000. Now, the bearish case is pretty much the exact opposite. The Bank of Japan hints at faster rate hikes, which would likely trigger a sharp correction, especially in those very same tech stocks that are leading the market today.
So based on all of this, what's the investment stance derived from today's analysis? Well, here are three key things. First, the overall environment is slightly bullish. Second, the clear momentum is with technology and export-driven companies. And third, while the outlook is positive, you absolutely have to be prepared for some potential volatility, especially around that upcoming Bank of Japan meeting. And that leaves us with one last, really crucial question to think about. We saw tech stocks single-handedly pull the Nikkei higher today. So, is this powerful surge the beginning of a durable new trend, or is it just a fleeting one-day reaction to some news from overseas? The answer to that question will likely define the market for weeks to come.